Good morning, good afternoon, good evening, depending upon the time in which you're going to watch this particular video. This section is about Indian Income Tax Act, which is very, very important. And it's better that you do the planning at the beginning of the stage itself, how you want to plan your cash flows. It's very, very important. And make the best utilization of it. So here I'll be not talking about all the section, all the deductions and all that stuff. I'm going to give you a gist of it, what it is, right? And please note, Indian Income Tax Act keeps changing every financial year, which means in the month of January, our finance minister will come and present a budget, annual budget. As part of it, there will be something called Finance Act. As part of the Finance Act, they will also make changes to the Indian Income Tax Act also, whether it is percentage of taxes, exemptions, anything. So that means whatever I'm going to share today is relevant for this financial year 22-23. So anything could change. So please keep updated yourself, right? Before we go into it, what is very important is we should understand what is income tax. We all make money. When we make money, what happens is Government of India says is that is good, you have made money. We have given you the infrastructure. When I say infrastructure, it could be road, it could be power, everything we have provided to you, right? And not all the people in India are able to make money. So what happens is that is up to a certain limit. Let's assume that first 2.5 lakhs is completely tax free, right? So beyond anybody who's making beyond 2.5 lakhs, then they say that government is saying that, can you give me 10% of it? I think 10% is a very nominal amount, out of 100 rupees, you give 10 rupees. So what does it do? What does the government do with the 10 rupees? Government goes and spends on further infrastructure. For example, 20 years before, we didn't had this, in Chennai, we didn't had the express highway and all that stuff, the Rajiv Gandhi highway, the OMR road and all that stuff. So they have to build all the all the projects, right? So that's why income tax is there. And let's say you are making, let's say 10 lakhs of rupees. So beyond 10 lakhs of rupees, they say, give me 30%. Okay, that means for every 1 rupee you make, give me 30 pice, which is absolutely fine. So this is what is called as income tax. And this is the definition of income tax, which I don't want to go through. You can read the slide. Now, when it comes to India, if you look at the Income Tax Act, and if you look at the income tax form, there are 5 major headings. There are 5 major sources. Okay. The 5 major sources are income from salaries. Please understand, 90% of our Indian companies are family-owned companies. When I say family-owned companies, I am talking about Tata Group, I am talking about Aditya Birla Group, I am talking about Sundaram Group, I am talking about Murugappa Group and all that stuff. Even though these are all family-owned companies, please understand that even the top executives, the family members of, let's say, Sundaram Group or Murugappa Group, draw salaries. When I say salaries, they will draw something like 2 lakhs per month, 2.5 lakhs per month, 24 lakhs. Some people will draw 5 lakhs per month. Some people will draw 6 lakhs a month as salary. So one of the major source of income is salaries. With salaries, you get certain set of benefits. There are certain benefits that you get. So that means salary income has a lot of advantages. So even if you are going to start your own private limited company, please understand that as part of tax planning, you can become an employee and then you can get a salary. The second thing is that is house property. Now typically some of us will have a lot of love towards real estate. We'll buy the first apartment, we'll buy the second apartment, we'll buy third apartment, we'll have 5 apartments. So if you have 5 apartments, government says that only for the first 2 apartments, one can be your primary apartment where you are living, another apartment can be in your native place or some place where you want to relax or whatever. Those 2 properties you don't have to pay. It can be self-occupied properties. All other properties you have to pay tax. Even if you don't rent it out, let's assume that you keep it as lock and key. From the third property, you have to assume that as though you have rent it out, you have to pay taxes. That is called income from house property. The third one that we talk about is called capital gains. What is capital gains? For example, we talked about direct equities. We talked about mutual funds. Okay, we talk about equity mutual funds. Now, what happens is that is in equity mutual funds, what happens is there is something called a dividend income is there. That dividend income will be the dividend income will be taxed as income from other sources, or the interest income will be taxed over here. But the appreciation in price, the real estate we talked about in one example, like 1 crore you bought and then you sold it at 148 lakhs, right? That is called as capital gains. Capital gains. So when you sell more than the cost, there is an income that you made because of the gains. For that gains you have to pay taxes, right? And the next one is other sources. Other sources is dividend and interest. Sometimes you will also get something called tax-free income. Okay, we will be talking about annuities and tax-free incomes later on, but there is something called tax-free income. For this, you don't have to pay any taxes. And the last but not the least is that is some of us would like to have income from business or income from profession. For example, I become a doctor, I become an architect, or I become an accountant, correct? Now that is called as income from profession, correct? Then you will also start something called sole proprietor, partnership, private limited and all that stuff. Private limited is a separate pan. Let's not go there, but I'm talking about sole proprietorship or a simple partnership that will be called as income from business. So these are the 5 sources of income under which you are being taxed. Okay. So please understand that when you create your portfolio over the period of next 20 to 30 years, please ensure that you have a balanced portfolio. Okay. Now 2 years before, I'm talking about 2 years before. So financial year 2021, okay, what happened was that is our finance minister brought in a new tax regime. What happened is you will get higher, for example, even only when you exceed more than 15 lakhs, you have to pay 30% taxes. In the previous example, we saw 10 lakhs, right? Here they are talking about more than 15 lakhs, you will pay 30%. So which means the Prime Minister and the Finance Minister thought we'll bring a new tax regime, but we'll remove all the exemptions. But unfortunately in India, there are no takers. There are not many takers for the new tax regime. Still people are holding to the old tax regime. That is the fact of life, right? So let's talk about this. What is old tax regime and what is new tax regime? First 2.5 lakhs, no taxes for normal people like you and me. But if you are a senior citizen, let's assume that more than 60 years, maybe 3 lakhs. But if you are a super senior citizen, which means more than 80 years, your grandfather, my grandmother and all, if they are living more than 80 years, then what will happen is first 5 lakhs, no taxes, right? Otherwise, what government is saying is that is more than 2.5 lakhs to 5 lakhs, pay 5%. There is no difference over here. But what happens is that is more than 5 lakhs in the old tax regime, it is 20%, whereas in the new tax regime, it's only 10%. But you don't get any kind of deduction. What is the deduction? For example, there is something called equity linked saving scheme. Okay. So in an equity linked saving scheme is eligible under section 80C. Okay. You can invest up to 1.5 lakhs in a mutual fund with a 3-year lock-in, and you will be able to claim deduction under a old tax regime. This is possible under a old tax regime, whereas under new tax you can't claim that. Similarly, there is something called section 80D. For example, we talked about healthcare, right? From basics of personal finance, we have been talking about healthcare and all that stuff. When you do healthcare benefits, what will happen is that is you get certain deductions for it, right? So that is available under old tax regime and not. So section 80C and 80D. I'm just giving you only few examples. But under the old tax regime, if you look at it, your 30% tax bracket kicks in more than 10 lakhs. Whereas only when you in the new tax regime, more than 15 lakhs, your 30% tax scheme is there. So you should understand what is the tax impact, how you want to plan it and all that stuff. Once again, I'll repeat it for the nth time. Tax planning is ethical. Tax evasion is unethical. So reach out to the tax advisors and then find out what kind of tax planning you will be able to do it. So what choice you should make, whether to go for the old tax regime or the new tax regime, very, very simple. If you're able to save 2.5 lakhs, let's assume that 2.5 lakhs. If you're able to save 2.5 lakhs under various headings, whether it is house property, you get cell phone property and all that stuff, or we talked about ELSS 1.5 lakhs, and there is something called NPS, National Pension Scheme, and there is something called Section 80 CCD. Okay, you can save another 50,000. If you are able to save 2,50,000 rupees every year, which is 20,000 rupees per month, 20,000 rupees per month, my suggestion at this point in time, my suggestion is go for old tax regime. Okay. On the other hand, let's assume that after completing your IIT Madras studies in 2 years or 3 years, let's assume that you are going abroad. Let's assume that you're going to take a citizenship somewhere else. Then go only for new tax regime. Correct? But you are going to spend all the money, this 2.5 lakhs you're not going to save and all that stuff. Go for new tax regime. So please talk to a tax expert. Our suggestion is, if you're going to save 2.5 lakhs, go for old, otherwise go for new. Okay. Thank you very much. I hope this session had been very useful for you. Thank you.